it's a really good option that people should know about. And I don't think a lot of people know about what you guys can do and how you guys are different from lenders. So hey everybody, this is Tatyana Sturm with the Stork team and Exit Realty Denver Tech Center. I have Kelly from Redstone Bank. She's here with us today, and actually we have worked together for several years. I actually do banking there, and I've done a lot of projects with her over the years. But given in this crazy market that we're in right now, where a lot of sellers are having a very difficult time selling their home and then buying a home, we have to do some unique things, think outside of the box to facilitate a lot of those sellers' needs. And so Kelly has a great product at Redstone Bank. And again, we're here in Aurora, Colorado. Redstone is just right off of Parker and Arapahoe, right next to the Starbucks. But I brought her on today so that she could tell us about a bridge loan product that Redstone offers. Now, it is different than most traditional lenders' bridge loan products, and that's why what we're going to talk about today. But let's talk about it, Kelly. Let's start going over some of the things that you look at and the requirements and why you are different, why your product is different than a traditional mortgage broker's bridge loan product.
Sure. So real quick, it's a 1-year loan. We require monthly interest-only payments, interest rates fixed at 3.95%. We charge a 1% loan origination fee, no prepayment penalty. It can be paid off at any time. We lend up to 80% of market value, either on their existing home or on the home that they're purchasing, or a lot of times we do both. We are not a mortgage lender. We do not make mortgage loans. The reason we would do it on both is maybe they've got a fixed debt ratio in your normal mortgage world and can't get the mortgage on the purchase until they sell the home. So we would do the loan for the purchase. We would do the loan to get equity out on the existing home. Once they sell the existing home, they pay off their first mortgage. They pay off Redstone Bank's second mortgage, the bridge loan. And then they can go out and refinance the bridge loan we have on the home that they purchased. So that works, well. And then the mortgage company ends up doing that loan because Redstone Bank does not.
Right.
So that's why mortgage brokers kind of like to use us in that situation. We're a local community bank. Our decisions are made here. So we're quick. We usually can get things done relatively quickly. On a second, we've got a rescission period. So that's a 3-week deal. But, really normal time frames a month. Sometimes because of fixed debt ratios, maybe the mortgage lender is able to do the purchase. But if I'm going to do a second or a bridge on their existing home and the fixed debt ratio is a little high, maybe I pay off a car loan with that bridge loan, and that helps fix debt ratio. We're not necessarily locked into fixed debt ratios like
Kelly. Real quick, can you explain fixed debt ratio when you're talking about that? What does that mean, like in layman's terms, to the consumer?
That ratio is your monthly debt divided into your monthly income.
Okay.
And that a fixed debt ratio usually needs to be about 43%, no higher than that.
Right. And this is what most traditional mortgage brokers are looking at.
That is correct.
You don't necessarily, as a bank, you're not looking at that. You look at the whole picture of the borrower, the whole financial stability of that borrower.
Yes, we're more, we look more at net worth. The borrower has a lot of equity in their real estate, but maybe they don't make much income, and put that into their, so that they can borrow more of their equity in the real estate to pay off maybe some of this debt that they need to now, so that they can qualify for, the mortgage for purchase.
So I want to just go over an example that we're doing with a mutual client right now so that somebody watching this could understand how this works. So I have a buyer who has a limited amount of cash in the bank, and they want to buy a house, and they want to complete that purchase before selling the house that they're in. It just works logistically better for their family. So in this situation, we're going out there, we're making offers on houses, but unfortunately in this market, we don't have enough cash to be competitive with other offers. So what my buyer did is they went to Redstone, and you are doing the bridge loan that actually one of my lenders at Fairway Mortgage couldn't do because they're in those constraints of debt ratios, right?
Yes.
And so they're able to complete the bridge loan with you, get the cash out of their existing house, which we're going to sell at a later time, so that they can be competitive on their offers on the houses that they're trying to buy.
Yes. So with your buyer, Tatyana, he was going to need 50,000 more than what the appraised value was going to be. So he needed his down. He didn't need his down payment because he was a VA loan, but he needed that 50,000. His fixed debt ratio is quite high. But what he has is he's got a house worth 350,000 and he only owes 100. Mm-hmm. So with him, we could have lent him 80% would be 280,000, owes 100. So he's got 180,000 really in lendable equity. So what we did with him is we are giving him the 50,000 he needs. We're paying off a car loan of 24,000. That helps with the fixed debt ratio, gets rid of that payment. And because we thought he was a little tight on being able to make all of these payments until he sells his house, we also lent him the money and set up an interest reserve account. And really what that was is it's where we lend him 1 year's worth of payments for our loan. We put it in a checking account here at Redstone Bank. And then every month when the payment is due on the bridge loan, we debit that account and make that payment. Mm-hmm. That reassures the bank that he's got payments for our loan for a year, if he needs a year to sell. But
be selling his house, so it'll go fast.
I know it, and it always does. It always does. But this is kind of, banks with their worst case scenarios.
No, I get that. Yeah.
And so that takes care of him, because he's got this, quite a bit of equity that he could borrow against. So that's how we helped him. And because we paid off the car loan and because we have the interest reserve set up on his bridge loan, so we did a loan of 84,000. Fairway Mortgage was able to do the loan to help him do his purchase loan, because we helped take care of their issue with the fixed debt ratio.
Right, paying off the car.
Paying off the car. Yep. Yep.
So, again, I thank you for your time. I just wanted to bring you on because there are other options for sellers out there. We have to make sure that they're in a position on their house that they're living in, that they have, the equity to be able to do this, obviously. This really helps, like I said, logistically with a lot of sellers and people wanting to move up, because the biggest fear right now in this market is, I want to sell, I want to get a bigger house, or I want to be in a different area, or I need a home office, or whatever it is. but the fear is being homeless. And
exactly. Yeah. You have no problem selling, but can you purchase? That's the issue. That's right. Yeah.
Well, I really appreciate your time, Kelly, and thank you for all the years that we've been doing business together. Always try to send people your way, and you've always been very flexible with me with my loans, and a great local bank to work with in the area. So,
well, thank you, Tatyana. You're pretty nice to work with yourself.
Thanks.
All right. Well, and the other thing I can say is if you just call me and say, okay, this is a situation, this is kind of a crazy deal, I can pretty much tell a person over the phone, oh, that's something I think we can do, or no, I'm going to be wasting your time. So that hopefully gives people, they can find another alternative.
Another option. So
yeah.
Well, I mean, we need things like this or as real estate agents and stuff, we need this in our back pocket, because if it wasn't for you, I wouldn't be able to do what I'm doing with my client right now. I mean, it would have been, impossible in this
right.
So,
Right.
Great product you guys offer, and I look forward to sharing it with people. So hopefully I can get more people under contract in homes.
Exactly. Sounds good.
All right.
All right.